Welcome to this Asia Global Podcast, brought to you by the Asia Global Institute at the University of Hong Kong. I'm your host, Alejandro Reyes, the Institute's Director of Knowledge Dissemination. In our programs here in Hong Kong and online, and in the content that we produce, we focus on presenting Asian perspectives on global issues. Our focus in this episode is the regional and global economies. The pandemic has triggered a crisis like no other, to quote the International Monetary Fund, which is forecasting that the global economy this year will shrink by nearly 5%. The World Bank's estimate is about the same, a 5.2% dip, which would mean that the world will experience its worst recession in over 150 years. The Asian Development Bank, the ADB, which will be holding a virtual annual meeting next week, is predicting growth in developing Asia of just about 0.1%, the lowest in 60 years. The global economy could be in for losses of up to $8.8 trillion, according to the ADB, with the Asia Pacific accounting for about 30% of that overall fall in global output. Economic losses in the Asia Pacific could run up to $2.5 trillion. Governments around the world, to varying degrees, have been implementing fiscal and monetary easing, increased public health spending, and direct payments to individuals to cover losses in income and revenues. So the ADB reckons this could soften the blow from COVID-19 by between 30 to 40%. Meanwhile, COVID-19 will likely slash global trade by up to $2.6 trillion. Global employment will fall by up to 242 million jobs, with Asia and the Pacific comprising about 70% of that total. Labor income globally will decline by up to $1.8 trillion, with economies in the region accounting for about 30% of that. Now, we're talking trillions here now, so this is really quite an unprecedented downturn. Forecasts are still hard to make at this point, with the pandemic continuing to play out and countries in the region experiencing second, third, and possibly more waves of infections, countries and regions experiencing these new waves of infections. So joining me now from Singapore is Manu Bhaskaran, founding director and CEO of Centennial Asia Advisors, the Asia arm of the Washington, D.C.-based strategic advisory firm, Centennial Group. He is a member of the Regional Advisory Group for Asia and the Pacific of the IMF and an adjunct senior research fellow at the Institute of Policy Studies, IPS, an autonomous research center of the Lee Kuan Yew School of Public Policy at National University of Singapore, NUS. More to the point, Manu is one of the most insightful economists and astute observers of the region that I know. And I've known him quite a time, for almost 30 years, I think, Manu. So Manu, welcome. It's really wonderful to see you.
It's a joy to be here. Thank you.
Yeah. So I'd like to start out by asking you very generally your perceptions of the global economy at this stage of the pandemic. What are your general thoughts about the damage done and where we are now and where we're heading?
Thank you, Alan. Once again, thanks for having me. Well, if you look at the global economy, we've now have data for most countries for the second quarter. And indeed, as you pointed out, we have the worst contractions ever, right? It's even worse than the global financial crisis, the Asian financial crisis, and they were pretty bad. But my own feeling is that we are over the worst. And I think we are beginning a slow recovery. The pattern of recovery is going to vary according to a number of factors. One is the success with which the state in most of these countries have been able to contain the pandemic and restore confidence of consumers and businesses and so on. The second is the capacity, again, related to the state, right, to bring in fiscal, monetary, and other policies to support the economy, to preserve the economy while it is in this sort of induced coma, and then to bring the economy out of that induced coma and revive it so that it starts to function again. And so I think state capacity is really the critical ingredient in all this. And the differential pattern of recoveries that you're seeing, a V-shaped recovery in China and more subdued recoveries in some other places, I think reflects that state capacity.
Oh, interesting. You mentioned V-shaped recovery in China, which of course people will say, well, China, of course, the virus originated, at least we believe the virus originated in China, and so they imposed quite strict measures to control the virus, and we see economic activity returning there in earnest. What are the dangers? I mean, is it indeed going to be a V-shaped recovery? What happens in terms of if China, for example, is dependent on markets such as the United States or the EU in terms of demand for its products, and those markets are still sort of struggling to recover, will we not see that kind of V-shaped recovery somewhat blunted, if you will?
Certainly, there are risks in China's recovery. The global demand is certainly one for two reasons. One is, of course, the impact of the pandemic on its major markets. And the second is, of course, the trade protectionism and all those horrible things that were happening in US-China relations. However, do note that China's dependence on the export engine has roughly halved since the global financial crisis. It's much more of a domestic-driven economy now. And that means it has less dependence on the export side and less affected by what goes on in the US and so on. So the export side is important, but less so than before. Secondly, I think the fact that they contained the pandemic pretty early compared to other countries means that, first of all, they do not need the kind of economy-crushing restrictions that are still in force in many parts of the world. They don't need it at all. In some parts of China, I'm told by my friends there that people are so confident that they are going back to normal activities, sometimes not even wearing a mask. Shows the confidence. When consumers are confident and businesses are confident, they start spending again, and that revives domestic demand, and that pushes the economy along. Secondly, the risk to growth do exist from other sources as well, such as the financial imbalances that have built up over the years in China. And we don't have a good enough fix because there's some opacity in the numbers and so on. But the Chinese policymakers seem to have contained those risks pretty well. And there are also countervailing forces at work in terms of policy support. Chinese policymakers continue to add a lot more stimulus to their policy framework. They are very careful not to overdo it because they do feel that in 2008, 2009, perhaps the stimulus was overdone and created some of these imbalances. But by and large, I think they have the right balance of policies, and that's really going to push the economy. I'm quite sure that the Chinese economy will grow by roughly 2.5% this year as a whole, which means a pretty strong recovery in the fourth quarter, and is probably going to register growth of maybe 8 to 9% next year, which really means that in terms of levels of output, China will be above pre-crisis levels comfortably by the second half of next year, unlike some of the other large developed economies.
Interesting. Now, if I could fall back, if you will, onto the old tropes that people bring up whenever we're talking about China, which is one, are they going ahead with reforms? Because this is always sort of the eternal question, and sometimes it's impossible to get a real answer. Whether the reforms are actually moving ahead, particularly in areas long promised, such as financial services and such.
Right.
And of course, we have the issue of debt. Which yes, of course everybody brings up as suggesting that the debt has been mounting and that there's going to be some kind of hard landing at some point. Yes. And then I would add that you still have the context of the US-China trade friction, the trade war, where you have this first phase agreement, but the tenor of the relationship between U.S. and China has gotten more bitter, and whatever promises China had made, the question is, will they go through with fulfilling those promises?
Very true. Well, the first question about reforms. My sense is that the Chinese have taken a step back. You've had this big COVID shock. You've had this further shock of a very decisive turn. And I do believe that the turn in US-China relations has gone beyond the point of no return. This is new territory. I think the Chinese leadership understands that, and they do realize that they need to make some big changes. So if you look at what they've done, I think the financial sector opening continues. You've had some American and Japanese firms being given the right to have 100% ownership, the various ways to encourage foreign ownership of Chinese bonds has, I think, really moved ahead. And as a result, the index constructors have now incorporated China into their indices, which means that if you're a passive fund manager, you have to allocate more funds to Chinese assets. So that's opening. That's happening, right? In terms of other areas, like hukou, for instance, I think they tend to move rather cautiously when you're talking about the top-tier cities. But elsewhere, they have moved on hukou, the labor market reform, and it's not going as fast and as widespread as we want it to be, but it is moving ahead. They also have a game plan for the future in terms of these urban agglomeration strategies. They're going to have these 10 big agglomerations, which I think makes sense, because I do think that the post-COVID, post-crisis world economy will be powered by what goes on in these big urban areas, right? And they've understood that. There's a huge effort being made in response to the US to improve their technology development, their innovation, and so on, not just in semiconductors, but in a whole range of areas. There's a big push as well for what they call new infrastructure. So there's not just mass transit and high-speed rail and expressways, but also things like ultra high voltage grids, because that is what you need for renewable energy. So, they have a game plan, they're implementing it. Some of it is not moving as fast as, others would want them to move, but they are moving ahead. And I think they know what they want to do. On the second issue,
sorry. No, that's right. The debt, yes.
Yeah. Well, of course, there are some people who've been predicting the collapse of China for a long time, and they're very annoyed that China hasn't collapsed yet. But they do have a point. There are clear structural weaknesses in China, and some of it is the product of, I think, misjudged policies from the past. So these need to be addressed. But the policymakers, I think, seem to be aware of this. They're not kidding themselves. And they've moved very cautiously, but step by step. And they seem to have managed to contain these excesses, at least for now. Of course, my problem is being an outsider. I don't have the full set of data, and we don't really fully know what's going on in terms of the debt. So it is possible that there are small time bombs ready to go off here and there. But as far as the known risks are concerned, they seem to have contained those. But we need to keep an eye on these.
What about issues such as the disruption of supply chains, particularly whether it's because of the pandemic or even before, where you had China Plus strategies being implemented by companies.
That's right.
And then, of course, the US weaponizing decoupling. And the impact that will have on China. I mean, you already mentioned that they're not as reliant on exports as before, but surely any kind of diversification of global supply chains will be detrimental to Chinese growth.
Sure. This is definitely an issue. And I would say that there is certainly a process of production relocation that has been underway for some time. Production relocation out of China. It began because of rising costs in China. And some of that was, of course, very necessary. I mean, frankly, the whole point of economic development is for a country to become uncompetitive in the low-end stuff. You want to move up the value curve. You want the low value stuff to move out of your economy and release resources for the higher value stuff. So that was necessary. It began earlier. Now, of course, now you have this additional factor of first, the US-China, essentially a Cold War of some kind, which means that there's protectionism, there are political pressures, and that causes firms to rethink where they locate production, and some of that goes against China. And then, of course, you've got this COVID thing, which has reminded people of the fact that maybe you need to focus not just on profitability through outsourcing and so on, but also resilience, which means that you want to produce more of certain things like pharmaceuticals. A large proportion of active pharmaceutical ingredient production and the constituents of antibiotics is produced in China or in India. And I think clearly a lot of countries are going to say, no, we can't do that anymore. And when it comes to things like PPE as well, ventilators, whatever, it'll have to be brought back on shore. So definitely there will be a faster process of production relocation. But how far will that go? Remember, companies are in this to make a profit, right? And if you're talking about demand, where is demand going to come from? If you're a large European multinational company, you're a large Japanese multinational company, and your home markets are not going to see much demographic support to demand growth, right? Where is the big source of demand growth? It's China, right? China is today almost 18% of the world economy. 10 years ago, it was about 10%. China cannot be ignored anymore. If you're a profit maximizing multinational enterprise with ambitions to grow your market, you have to have a China strategy. And you probably want to produce some of it in China because of various cost and other considerations, right? So there's one strong argument where the market you are tackling is really going to be largely a China market. You're probably going to produce a lot of that stuff in China. The second thing is, sheer cost efficiencies, right? China has developed extraordinary competence in manufacturing because, it's got economies of scale. It's got these clusters of manufacturing competence, which are really difficult to replicate. I mean, Samsung sort of replicated the mobile phone ecosystem in Vietnam quite successfully. So it can be done, but it's not easy. And it's not something that every industry, it's not something that makes sense for every industry. So with these two caveats, I think production relocation does happen. It does benefit Southeast Asia probably more than any other country. But, China will still have enough, I think, of the cake to enable it to grow by, 4 or 5% a year for a very, very, very long time.
Interesting. Now, this is a good segue into Southeast Asia, into talking about Southeast Asia, because you just mentioned that there could be benefits for Southeast Asia. So where are the economies there? Because one of the problems at the moment is that some Southeast Asian countries are really not doing terribly well in terms of COVID. I mean, the Philippines, for example, is one. But yet we have star performers such as Thailand and I believe Vietnam, although they had a few cases. How do you see the ASEAN economies doing right now?
Well, it's a complex question. At one level, you could argue this should be ASEAN's moment, right? You've got this production relocation. You have had leaders in ASEAN that have been promoting infrastructure development, improving the red tape and making the business ecosystem so much friendlier to investors, like what Joko Widodo has been doing, I think, quite successfully in Indonesia, what President Duterte has been doing to some extent in the Philippines, and even Malaysia and so on. You've seen a lot of fundamental improvement. So really, ASEAN as a whole should be doing well. I mean, you've got lots of other things as well, the synergies from its regional integration, all that. And yet there are issues, right? What are these issues? One is clearly politics. We've had some degree of political uncertainty in Malaysia with the change of government. We have renewed protest activity in Thailand, a bit concerning. So there's always the fear that something goes wrong in politics and sort of upends the good story that we've been trying to give out. Then you've got this whole issue of state capacity. And I think the management, or in some cases, the inadequate management of the COVID pandemic has exposed weaknesses in state capacity, which investors, both domestic and foreign, will look at when they decide, do we, up our investment, do we expand, we put in this new plant in this particular country or not? And that's going to have an effect. So unfortunately, I think COVID has exposed weaknesses in Indonesia and the Philippines in particular, I think, which investors will take note of, and which I think the rulers there will have to take note of and do something about. Yeah. The good news is that in Indonesia, they are moving ahead with important reforms. The omnibus bill that's in Parliament right now, I think will be passed by the end of this month. And I think there will be enough good stuff there that will fundamentally alter the labor market framework in Indonesia and make Indonesia that much more investable. And I think foreign investment will come in as a result. So there's still some structural positives, I think, in the region that we can look forward to. And I think that will power ASEAN growth. COVID will come to an end eventually, probably sometime early next year. It will come under control. And then providing some of the right decisions are made on reforms, improving state capacity, then the good stuff that is being done, infrastructure, reforms, and so on, comes true, and production relocation. And hey, you can get pretty decent growth.
You mentioned infrastructure, which of course I think is a very sort of important sector when you're talking about China's interaction with Southeast Asia, as well as Japan's interaction with Southeast Asia. Do you see possibly the costs of dealing with COVID as potentially having to divert funds away from this very important aspect of ASEAN development? And that could be a risk.
There's definitely a huge cost of this COVID crisis. But, let's take Indonesia and the Philippines, right? They actually brought down their public sector debt to GDP ratios to very, very low levels. And so we just had some data, for instance, on Indonesia. The effect of this COVID crisis is to increase its public sector debt ratio from, I think, 27% or 28% to about 36%. It's still way below the ratios you find in the United States, in Europe, in Japan, and so on. I mean, we still have in Southeast Asia tremendous capacity to mobilize debt for development through the public purse. So I think the cost is high. It has to be managed. We can't just dismiss it. But as long as sensible policies are pursued overall, and as long as the market remains confident in these countries, then I really don't think there will be a big problem in raising funds. If you remember, in the 1980s and 1990s, Malaysia embarked on very successful infrastructure building program, power, roads, and everything. And they built world-class, seriously, world-class infrastructure, most of which was funded domestically, right? With the right policy frameworks to assure investors that, toll pricing will be fair, the public-private partnerships will be structured in a way that will allow the investor to make a decent return. All these things, you get these basics right, land acquisition, all the stuff, domestic savings, in most cases will suffice. Where it does not suffice, if you get your basics right, you can raise funds from abroad. And then there's also the Belt and Road Initiative and the competing proposals coming from the United States and Japan and so on. The key thing, can these countries get their own basics right? Once you get the basics right, money will flow.
Thank you. Now, let's move to Japan, because we're soon to have a new Japanese prime minister. I suppose, when looking at Abe Shinzo's legacy,
Yeah.
he did manage to some extent achieve some success with his Abenomics program. I mean,
right.
it wasn't astounding, but he did sort of pull Japan out of the deflationary spiral
That's right.
to some extent. Where do you see Japan heading, and what would you advise to the new prime minister coming in?
I would hesitate to provide any advice, but but first of all, I would say that Abe Shinzo actually achieved a lot more than he's been credited with. I mean, imagine, Mr. Trump on his first day in office pulls out of the Trans-Pacific Partnership. Everyone says TPP is dead. Well, it didn't die, right? And now we have the Comprehensive and Progressive Trans-Pacific Partnership. I can tell you that would not have happened but for Japanese leadership. Vigorous, dynamic, and well-structured, behind the scenes, just nice. It worked brilliantly. And as a result, there's a chance that multilateral trade initiatives, multilateral trade integration can continue. And I think that's a tremendous contribution to the world, particularly the kind of world we have today with all this protectionism and so on. And that's just an example of how this much more upfront foreign policy actually worked. Okay, and within Japan also, certain things have been put in place which I think are there. They will outlast Mr. Abe. Female participation rate in the labor force is now higher than that of the United States. That's a tremendous achievement. Okay, a lot more needs to be done in terms of gender equality. Definitely, I think that's the case. But this itself is tremendous. The number of foreigners in the workforce, very touchy subject in Japan. That's doubled in those years, right? And people have grown accustomed to it. I think that's a great contribution. And these things are set in stone. And the most likely successor, Suga-san, was part of this, very much a mover behind the scenes of making sure that these things happen. And he believes in them, right? Not in everything that Abe-san did, but in most things. So I think there will be continuity under the most likely successor. One does hope that we don't get the revolving door prime ministerships that we had the last time. And as long as they can sort that out, I think a lot of the changes that Mr. Abe put in place are probably going to last. Now, whether foreign policy will be conducted with the same verve and vigor and flair that Abe-san and commitment that Abe-san showed, I don't know, but I do hope that it will continue because, gosh, in this world that we have today, we need a few adults in the room, and Japan certainly under Abe-san has been the adult in the room.
Has he been the adult in the room when it comes to Korea? And how do you see Korea as developing, particularly? You have of course, the tensions in the Korean Peninsula continue and seem to be mounting, but you also have the tensions with Japan.
Yeah, these leftovers from history are sometimes very difficult to resolve, and the current state of Korea-Japan relationship is not something that any of us are going to be happy about. And I do hope that both sides, I mean, it takes both to do this, come together and resolve it. I think it's very difficult, unfortunately. On Korea itself, actually, both Korea and Taiwan have really done well, I think. Not just in managing the crisis, which again shows that success shows something good about the fundamentals of those countries, right? But Korea has put in place a very thoughtful program to take advantage of this COVID and actually turn it into an opportunity. And they're going to galvanize growth in different sectors, and they're putting a lot of money into it, a lot of R&D and all that. I think that makes sense. Taiwan has been the real star. Taiwan has really been a star in this. They are doing well in electronics and IT, but even in other areas like agro-tech and all, they're beginning to make a mark. There's something about Taiwan that we may have missed or underestimated because of all the bad years that we had in the past. I think Taiwan seems to be making a comeback. I think that's good for the rest of Asia.
Interesting. Now, How dependent is Taiwan, though, on how the mainland does? Then that will continue to be the basis for how Taiwan does over the long term, I would expect.
Yeah, I mean, Taiwan is heavily integrated, whether they like it or not,
Yes.
into the mainland Chinese economy, and you do need, adult behavior on both sides to keep that going. Well, frankly, I think this is the single biggest risk for Taiwan because it really has become a flashpoint in the US-China relationship. And there is a fundamental lack of consensus on how to move forward. But it's interesting that neither side has really moved to break the relationship. Beijing is not imposing very harsh measures because it's not in its interest to do so, right? So I think what the Taiwanese are trying to do is to diversify away from China. So they have the new southbound policy, which they are pursuing with some vigor. It will take time for that to come through. But with all this production relocation and so on, I think that will eventually happen. We've had, I think, something like $26 billion worth of manufacturing capacity being reshored in Taiwan. And that's certainly been a source of growth this year, which is why one reason why Taiwan's economy is doing so much better than other export-oriented economies. I suspect that will continue as well. And that, of course, reduces the dependence on China. And interestingly, that's being powered not just by political consideration, but really by economic considerations.
Yeah. Now, before we move on beyond the region, I just wanted to quickly ask you about RCEP and your expectations for it. And will it be quality-wise, in terms of quality as a trade agreement? It's really not anywhere near the TPP level.
Absolutely.
So do you see RCEP as being important once it does, as we assume, get concluded by the end of this year?
No, I think it is important, and in a way, I guess it's a bit unfair to compare it with CPTPP. CPTPP, came out of like-minded countries that were keen to really substantially increase the synergies from economic integration. There was a commitment to make the kind of painful reforms needed, whether in agriculture or government procurement or dispute settlement. They made those concessions because they felt that the upside was sufficient to justify that, right? But RCEP is different. RCEP really arose because ASEAN has all these free trade agreements with different partners, right? Australia, New Zealand, China, Japan. And it made sense to bring it all together in one coherent framework. That's what RCEP is all about. And that's the objective of RCEP. And I think it achieves that objective, except for India. That objective is largely achieved. And by bringing all these things together in one single framework, you make it much easier for companies operating in that ASEAN extended region to invest and trade. And I think that achievement itself is worth it. And because RCEP brings in more economies, larger GDPs than CPTPP, the synergies, at least as modeled by various think tanks, is actually, the monetary benefits are actually in gross terms bigger than CPTPP. So it's not something we should dismiss. Obviously, I would prefer RCEP to be much more, 21st century, as they term it for the CPTPP, and address those issues. But the reality is you are bringing together economies as divergent as Cambodia and Laos on one side versus Australia, New Zealand, and Japan on the other. I mean, it would be impossible to be too ambitious for RCEP. So they're very different animals with very different roles to play and therefore different effects. Both, I think, are important. Both will help, as I said earlier, preserve the momentum of multilateral economic engagement, which we really need. We need every possible way of doing this, whether it's RCEP, CPTPP, or the EU-Vietnam Free Trade Agreement, or whatever. Let's do as much as we can to keep the momentum of trade opening going.
You mentioned India's withdrawal from the RCEP table. What does that say about India? In particular, of course, India is a country now being hurt badly by COVID-19.
Yeah,
what are your concerns?
I think India saw the geostrategic importance of being part of RCEP, but the economic justification was something they could not bring themselves to really accept. And their view was that, hey, we are opening up our economy and allowing you guys in ASEAN and so on access to our manufacturing sector where we are not as competitive, but you guys are not willing to open up your service sector where we are competitive. And the quid pro quo is just not there. And they pushed their case quite hard. And to be fair to the Indians, I think it was a fair argument, but somehow they couldn't persuade their economic partners to go along. And I don't want to sound too harsh, but it really does reflect something on India that where it had actually an arguable case to be made, and yet their economic and strategic partners would not play a ball. And it tells you something about India's geostrategic positioning, that it could not swing it in the end. And I think the Indian establishment really needs to think hard about that.
And what about the clashes with China? How do you see that as impinging on India's outlook?
Oh, it clearly has had a decisive impact. In India now, China is the bad guy. Again, like the Sino-US relationship, I think the Sino-Indian relationship has changed qualitatively, and it's gone beyond the point of no return. And as with America, I think trust has been broken. And I think that is not going to help at all. But it's worse than that. I mean, there have been clashes. Soldiers have died. And that has just completely changed the dynamic. So I think the trajectory is a negative one. And I think the risk of further clashes is actually very high, I think.
Manu, I'm wondering if we could just touch briefly on the EU economy, because you already mentioned EU-Vietnam agreement coming up. Yes. The EU has one with Japan, both an economic partnership and a strategic partnership agreement. And so the EU seems to be, in its own way, trying to diversify its relationships and looking beyond China in the region.
That's right. Actually, Japan's been the adult in the room, but I think the EU is also an adult in the room. The EU has been so preoccupied with its own internal issues for so long now. The whole issue of absorbing the former Soviet Union economies that took so much energy that they didn't really look at Asia for a long time, right? And then as soon as they were coming to grips with that, you had the European Union sovereign debt crisis, which again was a huge shock, and they had to go back and really rethink how their fundamental structures for the euro and so on had to be redone. But they've made a lot of progress. The pessimists have been consistently wrong on the euro, for instance. And if you look at Europe, I think there are many things about the European economies that are actually quite appealing to other countries. I mean, look at the German Mittelstand. Look at the competitiveness of the smaller Northern European economies like Sweden, Finland, Estonia even. Look at how Estonia has moved so far ahead with e-government and digitalization. Look at their social model, which gives immense social protections and yet somehow still manages to keep entrepreneurial verve. You got all these wonderful startups that come out of Europe, right? So I think Europe has a fantastic role to play. Yeah, it has fundamental problems with demographics, which they have not fully resolved. They have huge issues with their financial structure. The euro is still not a complete project. And they have Brexit to deal with, good heavens, right? I mean, that's not going very well. So unfortunately, they will still be preoccupied with their internal issues and also with the problems that Russia seems to pose to them, Belarus, Ukraine still remain big issues. So my fear is that we need them, but whether they can really engage with Asia on the scale I feel is needed, I'm not so sure of that.
Now, speaking of countries that are preoccupied and the need for adults in the room, let's talk about the United States.
Yes.
What are your thoughts? Because, of course, if we're looking at potential spanners in the works, the coming election could be one, because at the moment it looks like Vice President Biden is on track to victory, but we thought that with Hillary in 2016.
Yes.
And so how do you see America shaping up?
I have to be frank, I'm very concerned. I think the last few years, not just the pandemic, have really exposed a lot of problems with the American model, right? And as an outsider looking in, I have to say that, and I'm reflecting the views of a lot of people I speak to, America is just not that shining city on the hill anymore for most of us, right? We've seen really very disconcerting patterns in the US, the treatment of blacks, the inability to have a sensible discourse on things like gun control, extreme partisanship, the fact that a majority could vote for a certain candidate, but yet it is the other candidate that wins. And when you look at the social model, it doesn't look like the US is as appealing as ever, as we thought before. Now, of course, the extraordinary innovation capacity of the United States, the sheer dynamism, the incredible bottom-up strength still remains. So it's not like everything's a bad story. But overall, the US, I think, is less of an attraction, I think, to many of us in Asia than it used to be. Now, of course, we hope that after the election, things change for the better. But honestly, I'm not holding my breath. It's not clear yet who will win the election, whether the winner will have a majority in Congress to push through his agenda. So there is a great deal of uncertainty post-election. In the run-up to the election, and we have roughly 8 weeks, I think, the fear is that given the way the polling is going, would the current administration be tempted to pull off something in order to create a rally around the president, effect? I don't know how valid that fear is, but I can tell you a lot of people I speak to are very worried about that. Would it be something in terms of an aggressive trade action against China or someone else? Would the US Treasury report on currency manipulation unfairly target some of our economies? These are big concerns we have right now.
Indeed, a Biden administration is likely to be tough on China as well. And indeed, if you look at the current administration, which has essentially weaponized the decoupling concept, and given sort of impetus to this idea that there's deglobalization going on.
Yes.
I'm wondering what your thoughts about that. Is decoupling a thing? Is deglobalization a thing? And is that something that even a Biden administration might kind of try to catalyze?
I mean, I have to agree with you. I think whether it's a Biden administration or Trump second term, I think the relationship with China will continue to be troubled. Maybe a Biden administration might be less dramatic about things, maybe more structured in their approach, but I think the damage is done and it's not going to reverse, right? So I think we're going to get a degree of trade decoupling, certainly a strong degree of technological bifurcation between the two, right? So I just take that as unfortunately a given and something that we in Asia will just have to learn to work around, maybe at a cost to our economies, right? Globalization is a slightly different issue. Decoupling is really the US and China. Globalization is a broader thing. I think it's more a process of a slower pace of globalization rather than deglobalization. So yes, in terms of trade in goods, I think I think we are not going to see the big surge in trade to GDP ratio for the world economy that we had before. But I also think that the benefits of globally based supply chains and offshoring still remain. I think there's still a compelling reason in many cases to continue with the positive forces that drove trade in goods. Trade in services, of which tourism is a big part. Tourism will, I think, continue to grow. Yes, COVID is making a huge dent right now. It will take a couple of years at least before leisure travel comes back. But I'm pretty confident that in time we will find a way around it, and tourism will grow. And that means that services trade, and the flow of people, right? Remember, globalization is the flow of goods, services, people, capital, data, ideas, right? So trade in goods, slower. Trade in services, horrible right now, but probably will recover in a couple of years' time. Flows of people, very bad right now, devastatingly bad, but I think in time will recover. Flow of capital, I think that's going to continue, right? Even with this COVID thing, even with this China-US thing. I mean, look at the number of US financial institutions that have been given licenses to operate in China, and so happy to do it, right? Look at the number of fund managers buying into Chinese bonds because they are compelling, right? I think capital continues to be positive in terms of that, flows. And data, my God, look at the charts, literally off the charts, right? That's going to continue, right? Flow of ideas, well, maybe you put out these firewalls in China and so on, which I think are really negative. It slows it down, but people all over the world seem to be very attracted to different things. Look at TikTok and all that. I think it's unstoppable. So slower pace of globalization, I feel sad about that, because I do think that if you manage globalization properly, it is a net benefit for most people.
Interesting that you mentioned flow of capital, flow of people, flow of ideas. I'm sitting here in Hong Kong. You're sitting there in Singapore, which two places which people often pit as rivals.
Right.
Given the current situation here in Hong Kong, which I'm sure you know well, often people say Hong Kong's troubles are a boon for Singapore. So I'm wondering what your thoughts on that. Do you think that given the situation in Hong Kong with the difficulties with the relationship with the mainland, the new national security law, do you foresee a flow of ideas and people and capital down your way?
Well, a couple of points to make that. First of all, do recall that, global hearts of commerce and finances, which is what Hong Kong and Singapore all are, they are very resilient. Once you build this, interlocking clusters of activity that each depend on the other, it's very difficult for these to just dissipate, right? I mean, it takes a big, shock, some kind of big war or something like that before that happens, right?
Like a pandemic.
Well, pandemic is temporary, right? I mean, it's not going to go on forever, right? Even the worst plague in history eventually burnt out, right? So, I'm pretty sure in a year's time, things start really improving quite dramatically. So first of all, Hong Kong is really resilient, right? Because it is a typical global heart of commerce. Secondly, Hong Kong's value proposition in many cases remains, right? It is the preeminent gateway into China. Now, maybe some dimensions of that global hub may weaken if you don't get as much of a free press with the flow of ideas, the flow of information, of intelligence that you had before. It could detract from Hong Kong's value proposition, but that would take quite a bit of time to be evident. For now, I think it remains. Hong Kong remains preeminent in the equity side. Singapore, look at the stock market, my God, I feel like crying when I look at the stock market in Singapore. Look at Hong Kong, just gone ahead, right? Yes, and, this aggressive weaponization of finance by the United States is actually pushing large Chinese firms to go and list in Hong Kong. For now, Hong Kong continues to grow. as a place for equity listings and equity capital market activity and so on. The other thing that's going for China is, of course, for Hong Kong, is its participation in the Greater Bay Area. And as I said earlier, I think a lot of economic growth and vitality, dynamism in the next couple of decades will be in these big urban agglomerations where you have tremendous synergies to be gained by putting lots of people together and densely, right? And you get economies of scale and scope that are just way ahead of anything possible. Singapore has nothing like that in its immediate environment to match the kind of synergies that Hong Kong can get. So let's not rush into saying that Hong Kong is going to lose. Now, of course, there's always been a dynamic shift of activities between the two city-states. And there will be continued. Some stuff may well quite move to Singapore, but some stuff could well move to Hong Kong as well. I think that will continue. Now, the key thing is what determines Hong Kong's value proposition? What makes it unique as a Chinese city? The rule of law, especially common law, the free flow of information. Now, if those things are fundamentally undermined, then you could get stuff moving out.
Now, Manu, if I could take you home, as it were, and ask you about the situation in Singapore and how you've been coping, your family's been coping through the pandemic, the circuit breakers. How are things now, and what are your thoughts? Indeed, we here in Hong Kong, we postponed our legislative council elections, but Singapore went ahead with their general elections.
Yes.
So that's an interesting difference right there.
Yeah, actually, our elections were conducted smoothly, and I mean, it's not ideal, but despite the fact that conducting elections with the kind of restrictions on mass gatherings and public rallies probably hurt the opposition. The opposition did better than any of us expected, so the outcome wasn't that bad after all. Singapore, we have moved into phase 2, so a lot of the restrictions, thank God, have eased, but we are still far away from going back to normal, and the economy has been contracting. I think third quarter we'll see another contraction, but if we can continue to see improvement in the infection numbers as we are, and the global economy recovers, then I think next year we will probably grow by enough to make up for the losses this year. So I'm not too worried about Singapore in terms of the cycle. I think we have managed this reasonably well. We had tremendous buffers in terms of our savings that we could tap into to sustain the economy. So, we are fortunate. We are well placed in that sense. Now, moving forward, of course, we are one of the global hubs. We need travel. We need all these flows of goods and services. If the pandemic is not brought under control, if not just essential business travel, but normal business travel, normal leisure travel doesn't return, then our aviation hub, which is a big part of the economy, will suffer, right? And trade will suffer, and that's something that's essential to us. So we really need to see the world economy get back to some semblance of normality, and otherwise I think we would be in trouble. I think the post-COVID environment is going to be a difficult one for any export-oriented economy, but much more so for a small, highly vulnerable economy like Singapore. We rely on the international rule of law, not just in global security, but also in trade. That's been undermined by both the superpowers, frankly, not just, both have misbehaved. And so Singapore has to adjust. We have to find new models of economic development. We have to address the challenges in the global environment. We also have to address certain structural weaknesses that have appeared within the Singapore economy. We have pretty weak demographics, for instance, weak productivity growth, and our innovation capacity. There are still areas that we really need to seriously tackle. So we need to get those things in order. And if we do, and I think over time, Singapore has shown a capacity to reinvent itself and to adjust. If we can continue doing that, then we should be fine.
Manu, I'm just remembering that you've seen a lot in your career as an economist: the Asian financial crisis, the SARS epidemic, the global financial crisis, and now this. So setting aside all the numbers and the number crunching that I know you do with great industry, what are to close? What are your sentiments at this time? I mean, how are you feeling? Just about what you've seen and where we are now in this kind of really unprecedented time?
First of all, I think in terms of the pandemic, I think we shouldn't get carried away by pessimism. Humankind, countries, governments, peoples, communities are adaptable, resilient, and they bounce back. And we will bounce back from this. And honestly, if you ask me, my gut feel, as you said, put aside the numbers and all that, my gut feel is we will come out of this faster and better than people think. By middle of next year, or even earlier, the mood across the world, I think, is going to be a lot happier. So that's the first thing I'd say. I feel quite optimistic about the near, or put it this way, not optimistic, but more optimistic than, say, the consensus on the near term. Longer term, I am concerned. I think there are some deep structural issues. It's climate change and the unwillingness of certain political elites to face up to that. And as a Singaporean, of course, we sit astride the equator, and it's cities along the equator that will suffer disproportionately from that. So there are all these challenges, which we also talked about earlier, protectionism and the US-China relationship and all that. I think that's going to make for a very difficult world. But again, as long as you have resilience and adaptability, you can adjust to even the most hostile environments. So it's really up to us as individual countries, governments, communities to do something about it.
Well, you're rendering me speechless, because I think that's a perfect way to sort of end our conversation. I know I've taken you way longer than I sold it to you, and it's been wonderful to do a tour d'horizon, tour du monde with you. So thank you very much, Manu. I commend to our readers, our viewers, to please follow us on social media, Twitter, LinkedIn, YouTube. You know the drill. And again, thank you, Manu, for joining us. It's
wonderful.
Been
really
wonderful to have a conversation with you.
Thank you.
So
all the best.
Yes.
Take care. Keep safe.
Bye. You
Bye.
too.